Good evening, everybody. This is Pat Tabbitt with Man Over Market, and we're going to go over the recap for the day for the ES for July 30th. Well, today was a news-dominated day. Started fairly early with the ADP employment report. The consensus for that report was 235,000. And the actual came out at 218,000. And we'll see later on the chart that the market sold off from that news. And then shortly thereafter, the GDP numbers came out at 7:30 Central Time. In that report, surprised everybody. The consensus was 3.1%. GDP, and it actually came out at 4%. So then all of a sudden everybody turned bullish, and the S&P was going to go to the moon and so on. Well, let's take a look and see how all this played out. Before we do that, we'll go over our pre-market update from this morning. We had, as usual, the key levels, the market profile data, and we went over the session on Tuesday, which was early on dominated by buyers, and then the market made a high of 79.5, sold off for most of the session and finished at 1963, closing with volume below time and a bearish TPO count. And then as of 6:30 this morning, as I was putting together this report, the ES was consolidating near yesterday's session low, built a base, and started trending back up. And I wrote that it would take a 5-minute close below 1966 to turn the immediate trend back to the downside. And in order for this market to sell aggressively, we needed to build volume below 64. We currently had volume above time and a TPO count of 66 over 99, which made the ES bullish and therefore pointing higher. We had resistance levels at 71 quarters, 76 half, and 79.50. Before was at 1964, 1960, and 1957.25. Now let's go and see how this all played out. On the chart, as you can see over here with the first pivot challenge, this was happening at 3 a.m. I wasn't up. I don't think any of you were either, but this was a good opportunity to get long against the pivot, a challenge that didn't get violated. And then we move on to the ADP release. As you can see, again, they were expecting a much higher payroll number, and that's took the market down. Actually took the pivot out. This would have been a classic whipsaw. Not a very pretty trade here if you're so inclined to trade the news. And then 10 minutes later, the GDP numbers came out, and obviously we all know what happened at that point. The market exploded back up, pulverized the bearish pivot, turned bullish, and then the market was expected to trade higher and printed a high 1974.25, which turned out to be the high of the day. Then the market started trending down and hit the pivot one more time. This could have been at that point could have been traded as a buy signal. Again, the frame of mind at that point was other than the payroll numbers, everything else looked positive for the market to recover and go on and make new highs. However, it didn't happen. It actually broke the pivot, and even that trade would have been a difficult one to make because even though it was very profitable, if you were able to stay with it, it would have been very difficult to actually stay with that trade. At that point, we actually made a recommendation during this small rally from the low of at the time of 62.75. We actually made a recommendation to sell, I believe, the 72 level, which at that point the pivots was actually up there at 73. So I think it was 72.5, I believe, that we recommended. And of course the market didn't make it there. Corrected back down, went on to make new lows eventually, and about the only thing that we had in mind at that point, we actually did make a recommendation, was we just mentioned it on the site that we had our last support level at 57 quarter. 57 quarter was actually off the profile, was a low volume node, and even though the market exceeded it by a few ticks, 57 quarter would have been the ideal place to get long. Nevertheless, we didn't recommend a long there. We just mentioned the level as potentially one that could stop the downtrend. From that point on, we're going into the afternoon and the expected release from the FOMC meeting. This was, in my opinion, would have been a crapshoot, but the fact that the market rallied off the lows made it likely that the market would basically go back to midpoint, if you will, and by doing that, it also aggravated all the shorts. That all of a sudden, felt pressure, and then it led to this short covering rally, which also took the pivot out. The short covering rally went quite a ways, as you can see, and then petered out when all the buying stopped, and the sellers came back in, and then eventually it ended up where the day started. So this was, for me, it was a frustrating day. Lewis, I think, had a good day, but this is a news-driven day, and it is what it is. So we will reconvene again tomorrow evening for a recap once more of the day of the ES market. Thank you for joining us.